Hey, this is Skyler with Regan. Today we're going to talk real briefly about where home values are and where we think they're going. So if we take a look here, we're looking at, first of all, uh, median sales price, and this is the existing home sales price. It's one of the best measures that we can look at. Back during the GFC, we actually dropped here from about 250 down to 220. Up to COVID, we moved up to about 320, but you can kind of see a flat line here. Only post COVID did we have this crazy line that kind of matches a lot of inflation charts we see from that point, where we went from 320 to 440, and median home prices have actually come down since then to about 420. Now, let's look at the 10-year real quick. Just a really crazy post-COVID chart, and now we've kind of flatlined. Now, what happened with median income over this time frame? So if we look at median income over 10 years, um, kind of a flat line, not as drastic, but post-COVID, we're pretty much flat. We're back to where we were in 2019. So you have home prices going up a bunch, income staying roughly flat over that time frame. And let's think about that in terms of how much it takes in terms of yearly income in order to actually purchase that median home value. So I put together this little sheet, which is here's where we are today. We're sitting at assuming a 20% down payment and a 7% mortgage rate, which is where we are today. It costs about $530 per $100,000 of mortgage. And then it costs about $88 a month and $53 a month in taxes and insurance. Okay. So if we add all that up per $100,000 of home value, okay, and I relate this all back over here to home price, assuming that 20% down, you're looking at 673 bucks a month. Okay. So at 400K home price, and remember median home values 420 today, and we're assuming 400. If you are spending 25% of your pre-tax income on your home, you need to make $215,000 a year to afford that median home price. Okay. If you max out and let's say are using 40% DTI, which is really the max that insurers or lenders will look at, you have to make $135,000 as a household. Okay. So let's go back to that. What is median household income? Today, it's only $81,000. So that doesn't really jive with actually being able to afford a home. And this is really a starter home. This is median across the United States. We're using national averages here for taxes and insurance. If you're looking for $1 million home, you need to make at a bare minimum $336,000 as a household. On the high end of DTI and on the low end of DTI, debt to income ratio, 25%, you need to make $540,000 as a household. So if we look at where we got a lot of this data, what I'm using here is mortgage calculator. Okay. I actually zero out taxes and insurance because I want to get to hard data on that. 400K, 20% down, 7% interest rate gets you a monthly payment of $22.28. All I did is I divided that by 4. Okay. 22.29 divided by 4 gets me that 532 because I want to put it in a $100,000 value. Now, if we compare that to 2020, let's look at this. So in 2020, when median home value is only about 320, but I'm going to stick with this $400,000 home price, you needed about 85K on the low end. So this has gone up to the tune of $50,000. Okay. 50K there, but a much larger move here, 135 to 215, about $80,000 in increase. Whereas here it takes over a half a million in income. Here it took about 340K. Looking at some other data here, and again, all I did here was zero everything out. All I changed was the 3%. So just the monthly payment, which is principal and interest, went from 1147 to 2129. Okay. For property taxes, I used U.S. housing data. The average property tax rate across the United States is 1.05. For insurance, I used NerdWallet. Average of $1,915 a year, about $160 a month. That's per $300,000. Okay. How about monthly income per mortgage? I went over here to Zillow. Basically says 25 up to about 40%. Now let's think about a couple of other things that have really gone out of control because yes, home prices have gone up. We saw that chart, it's almost parabolic from here to here, but we've really flatlined since basically 2022. It's been almost the exact same. Now, what's coming down the pipeline are is taxes and insurance because it takes a little bit of time for insurers and tax authorities and laborers, et cetera, to catch up with the value of home price increases. Okay. So this was delayed by about a year. This is home insurance. And as many people who follow the news, this is likely only going to get worse as a percentage of home value. Okay. So this really ballooned post home value run up. Now let's look at property taxes. Um, flat line. This is just starting to go kind of parabolic here in middle to late 2023. This is only about 15, 16 months ago. I think that's going to get worse as municipalities fight over income. Then if we look at household maintenance, this is kind of flattened out. Hopefully that kind of stays the same. So let's go back to the story here, which is where are we today? Okay. So long story short, home prices are way above what median income can actually afford, let alone starter homes, or I would say, uh, you know, people in their 30s that are having kids, kind of transitional homes right here. So one of a couple of things has to happen. Either A, mortgage rates have to come down precipitously. I don't see that happening anytime soon. Uh, B, incomes have to go up precipitously, call it by 20% very shortly. Or C, home prices actually have to come back down. And if we, let's do a max on this, let's look at trend. Where are we really supposed to be? We're supposed to be about right here, which is about $350,000. Okay. So if median today is at 420 and we're trying to get down to 350, that's $70 differential. What can we forecast? A decline of about 17% in home values. Okay. Now, this could happen this year. It could happen next year. It could happen over the next 3 years. I think it's going to be a combination of potentially rates coming down a bit to let's say 50 base, let's say 650, six and a quarter. Home prices coming down 10 to 15%, and incomes hopefully going up 10 to 15%. If that all happens over the next 3 years, it'll be a very orderly decrease in home values, which will open up some significant opportunities in some more credit sensitive assets. We don't focus on credit sensitive assets at this point, but when credit sensitive assets really become interesting due to a decline in home value, we're going to be buying. Thank you for your time.